All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is January 11th on a Wednesday, 2023. Tomorrow is CPI. Just a reminder at 8:30 in the morning before the bell. We'll go ahead and go over that number at 9 a.m. tomorrow for the Morning Note as well. So a lot of information tomorrow. We'll make sure to get that out to you. Today, for the most part, just kind of want to set your expectations. More likely, it's just going to be a position day. In terms of the S&P, we had a nice boost yesterday. More likely, we're probably going to hit 39.70 today and then probably reverse as we chop around into the CPI. That's kind of the first scenario I was looking at this morning as we're getting a little bit of a push in futures. Dow futures up 95, NASDAQ up 0.28%, S&P up 0.36, and Russell up 0.30%. And again, we've kind of reiterated the same deal. That 3,900 S&P 500 level on the futures, that's your support until further notice. You got 3,900 right there. That's your support level. Now, again, you do have a huge binary event tomorrow with CPI. And then, of course, we have expectations, all about expectations and perception, right? We talked about that on a video a couple of weeks ago. So let's go ahead and regards to CPI, let me just give you the forecast. The forecast month over month is actually negative 0.01. These year over year forecasts are at 6.5%. And you have a 0.3 core CPI excluding auto and gas. So again, we do have used car prices coming down. That's a big one. We saw rents are actually coming down as well. Home prices are coming down. So again, we'll see if the CPI does reflect it for December. That's the reading we're going to get. Really, the real number we're looking for is the year over year. That's the kind of the big one, the 6.5%. If we can get anything below that, I think we're going to get a little bit of a squeeze to 39.97, which is the 200-day moving average on the S&P 500. And then after that, it's really up in the air because we can absolutely reject that and kind of chop around for a bit, maybe right around 39.53. If we go back to just last month's CPI, again, we had a nice squeeze to 41.79, broke the trend line, but we didn't settle above it. So again, kind of the scenario, if we beat on CPI, a lot of this could be front running. We could just be front running the CPI number where we're expecting it's really good. And then if it isn't, we roll over and break 3,900. And again, 3,900 breaks, that's level you want to short, especially if we get a bad CPI number. We'll definitely probably start testing maybe 3,800 or so. But with the assumption, let's just say it meets expectations of 6.5%, we'll more than likely get to around 39.98, and that's your support, that's your resistance. And then we kind of just hang around there until we had Fed Chair Powell and we get those earnings coming in. So again, we could also have a huge boost to 40.50, makes you back to this yellow trend line, which is the key. The real kind of the metal or the goal we're looking for is to kind of get us back into this channel, which is 41.22. And then if we can get there, that's when we could start seeing that inflation is subsiding. Maybe credit spreads are still staying tight. Our interest rates are coming down, the dollar coming down. Those are all going to be tailwinds for the market. So again, let's make sure we have those expectations. Again, the expectation is negative inflation month over month, and then we have a 6.5% on an annual basis. So my call for me personally, I think we're going to get to a 5.9. I think that inflation's falling. Inflation actually topped in June last year, but I think we'll get to a 5.9% CPI. That'll boost us to 40.50, and then kind of use 39.93 as that support, and as we'll close above there tomorrow is what I expect. Could we go higher? Could we go lower? Absolutely, but that's just my view on that. We could take a look at 10-year Treasury yields, and again, today is going to be more positioning day on the S&P. Again, we may get a little bit of front running, but again, tomorrow's a very binary event. You want to take your profits ahead of time. You want to be clean ahead of CPI. If you kind of want to throw a crumb here and there, maybe a hedge for a short, or maybe you want to ride the wave higher if we get a break, I think probably futures is your best bet. If that's the case, you have a little more control because the actual number comes out at 8:30 in the morning versus 9:30 in the morning when options trades open. So again, you don't want to be stuck holding something that it's not going to get any value or any prospect of turning around. So here's a 10-year yield chart. Again, we see that mortgage rates have also gone down as well this morning. I believe the number, we had mortgage applications up 1.2%, 30-year mortgage rate 6.42%. The previous was 6.58%. The forecast for mortgage applications was the previous was negative 10%. Now we're getting in a plus 1.2. So there's one little piece that I want to talk about that I've been talking about with the staff. Again, I've already talked about how I believe it's a bottom on the S&P 500. I think that's no secret, and I'm still on that island on alone there. I mean, it's hard to be a bull when I'm surrounded by bears, especially on social media, and I get it. But really, the key, if you do see that we're going to get a bounce or something, it's really going to be interest rates, and it's really going to be housing. So just keep this scenario in our back pocket. If the S&P 500 were to go higher, what's going to make it go higher? Really, the key is housing. And the reason I say that is because if we get rates to go lower and the dollar leads interest rates lower, maybe we get to a TNX here on a 10-year basis of around, let's say we get to 3143. That kind of gets us to around a 5.5 mortgage on a 30-year. That's not terrible, especially if you bought just last year. May give you a chance to refinance. And again, that's lower debt payments, and that's going to be helpful for mortgage owners and homeowners. And again, if you start getting interest rates go a little lower, maybe we start getting a little bit of a push higher in housing prices, but then it's a little more moderate pace instead of just a big whipsaw up and down that we've been seeing. So again, guys, what we've been getting is a broken market in the past 3 years due to a pandemic. So you have the stock market going higher very, very quickly with cheaper money. And then we have a big fall when the punch bowl is taken out, right? See from here, we had the big push higher and then here's the low. So if we take half of that, again, imagine if COVID never happened, 2020. Let's just say COVID never happened and we're just trading the stock market regular basis. Would you say 3,500 at the end of 2020 would have been a fair assessment if COVID never happened? Maybe 3,300 or so. Remember, we were at 3,404 right before it happened. So really, if that's the case, and we were just kind of holding pace, 3,400, and then we started doing the average of around 6 to 7% with relatively easy inflation, maybe we did raise rates a little bit in 2020 without COVID. Let's say we didn't have it. Would it be fair to say that 3,800 by 2022, if not 3,956, sounds about right? If we had about a 10%, maybe 8 to 10% compounding from 2022, 2021 to 2022, maybe. I mean, obviously, politics aside, geopolitics aside, that seems to be kind of fair value, at least based on the perspective of corporate earnings. And again, we need to see those EPS numbers. If we're getting more people getting laid off, that's going to be a labor tailwind. Again, that's going to bring down labor costs. Again, the dollar, I keep talking about it all the time. The dollar did hit a death cross. Remember, we had the 50 break below the 100 on the daily chart, the 200, excuse me. So you could see that the red line here is your 200 day. The 50 DMA has crossed below it. That is a bearish signal. So again, what we're really looking for is right around that 100 handle. If the dollar can come down, that means bond yields are going to come down. And then again, maybe gives people an opportunity to refinance your home, or if you want to buy a home, for example. It makes money not as cheap as COVID 2020, but a little cheaper, a little more reprieve. Think of it this way. Gas prices last summer were right around $5. Right now, they're right around maybe $3 a gallon, maybe 3.20, let's just say, in Florida. Just bear with me. You really didn't save money, but the illusion of saving money makes sense. You're saying, "Oh, I'm saving money on gas prices." Yeah, because you overpaid in the summer, and now it's coming back down to a moderate level. So, that's kind of the same kind of valuation you kind of need to look at it as a trader and an investor. Is that now we're starting to see possibly if inflation does come down, we're going to get a moderation of things. But again, that depends on many factors. It doesn't mean that we cannot go lower. Of course we can. I just don't think that we do. And I think things are starting to moderate in a more, in a way where, again, if inflation does come down, we're starting to get a little bit normalized in terms of pricing, at least on that end. Russell 2000 futures up 0.27%, crude oil up 2%. Thank you, dollar. The dollar is pretty flat at 103.34. Commodities are going to go higher, like copper. Copper is breaking out above the 200 day. Why is that important? Again, this is an industrial barometer. If copper prices are going up, that means demand and expansion is coming. Gold futures 0.24%, 1881. Silver futures 2383, up 0.7%. The euro dollar, again, watching the euro dollar very closely, 107.48, hasn't broken my level. But again, if you are a Forex trader, you're watching that 107.80 level very, very closely. More than likely, CPI will tell us if we get there or we break above it. Binary events. Dollar yen, that's at 132.65. Pound dollar 120.99. That's down 53 pips, so the pound dollar is weaker. Bitcoin and Ethereum crypto is down today, at least on the futures side, 17,415 and 1331. That's where we are currently. I'll bring on CPI. Ray says, put to call ratio out yet or not yet? No, I'd have to see at the open where we are, but we can take a look at it from yesterday. PCSP is the ticker on TOS. PCSP. All right, doesn't really show much here, at least. On the hourly chart, again, a little bit of a push higher and put to call, but you could see call buying back on Monday. So you see a lot of people riding the wave that we're having really the last couple of days. So really nice price action so far. Basically everything that we've been saying, that 3,900 levels held. I still think we get to 4,000. That's your 200-day MA, and that's pretty much your resistance unless we have a really great CPI. If we had expectations, I think we get to 39.98 and possibly reject it. If we beat expectations, a 5.9 handle, then we'll hit this trend line head on at 40.44. We'll see if we break above it. But again, guys, remember, we had a CPI in December too, and we spiked up. The problem was that after that, we had Powell and FOMC. We don't have that this time, at least right now, not after CPI. Powell and FOMC come in on February 1st. So just kind of keep that in the back of your head. Let's go ahead and take a look at BABA real quick. If you guys, we talked about that yesterday. We caught that yesterday. Well done on Alibaba. Not Alibaba, excuse me. That's what I have open. Excuse me. DAL, Delta Airlines. This is the one we talked about yesterday. Beautiful price action, nice breakout. I mean, what more could you say? Sometimes it just works out great. 35 was support, and then it continued to pull back at 36.50 on that fall job, and then we continued higher. BABA, the one I was talking about, really I'm looking at. Here are the data. You could see the Chinese stocks are doing very well. We'll compare FXI. Got a nice gap to fill here at 120.79. Tons of volume upside on Alibaba. Take a look at FXI, which Alibaba is the biggest part of the index for the China stocks. There's your gap fill at 135.45. You have a breakout of this trend line, very similar to the S&P 500 downward trend that we've been having. If we get above 32.60 on FXI, it gets very, very interesting because we may be able to ride a train higher if we start seeing a COVID recovery in the Chinese Communist Party country. Thoughts on AbbVie? Let's go and take a look at it. Healthcare is taking a pullback. Even UNH, one of my favorite names. AbbVie right now is testing the 50-day moving average. I don't see a lot of gaps to fill down here at all. If you're looking for a place to want to buy here, let's take a look at the weekly. Above every major moving average, a lot better than the S&P, obviously. I think what you're going to get on AbbVie and healthcare is a little bit of a rotation. You're going to get a rotation out of healthcare, which has done well, maybe from energy, what has done well the past year, into more growth. But again, that's going to be dependent on one thing, rates and the dollar. So again, if rates go lower, you're going to get more money into aggressive growth tech companies, biotech, not just healthcare, like if a Humana or a UNH pulling back, or a Merck. Merck, which we've traded before, and look how much that has fallen down. Not quite much, about $5 from the peak. And then you have Humana, another great name, but that's pulling back. And of course, UNH, one of my favorites, and that's pulling back as well. So again, what we're just getting for the most part, Sovereign, is a little bit of a rotation out of healthcare. And take a look at Qs. You know, it's not doing great, but again, starting to form a little bit of a base right around 260. So, you know, not all is lost as of yet. The big level here is the COVID lows around 235.58. Again, a bad CPI may just get you there. So something to think about. We'll go ahead and leave it there, guys. Have a great rest of your morning. I will catch you guys tomorrow for the morning note, talking about CPI and that report as well. I went ahead and did a reel this morning. If you guys like those reels in the morning, I wake up pretty early in the morning to read the news. Feel free to like the comment I wrote under that reel. And we also have a deal running for premium members, for annual plan premium members. Again, we used to have it at $1,500. We went ahead and lowered the price. Inflation is coming down. Let's just call it that. $999 for the year, one annual plan. Remember, basic is $125 a month. If you did that for 12 months, you're better off just getting the premium deal, and then you save some coin. Start your 2023 right. Maybe we do get this bounce. Maybe we get the low. Why not be with us for a year and see how it goes? Have a great rest of your morning. I will see you guys tomorrow. Cheers, guys.